This podcast is sponsored by buybiz.io. Discover premium AI-driven online businesses for sale, perfect for standalone growth or seamless integration. Explore now at buybiz.io to kickstart your digital success.
Judging revenue source quality. When buying a business, what you need to know. Discover how to evaluate revenue source quality for smarter business purchases and learn why dependable income matters more than just big numbers. How to judge revenue source quality when buying a business. You know, when people talk about buying a business, the first thing that usually comes up is the revenue. But here's the thing, not all revenue is created equal. If you're thinking about investing in or buying a business, one of the smartest moves you can make is figuring out the quality of that revenue. It's kind of like comparing two bank accounts. One might look fat at first glance, but scratch the surface, and it could be patchy or unreliable. So, what do I mean by revenue source quality? Well, it's really about how dependable, sustainable, and scalable the income coming into the business is. Let's break down a few factors you want to keep in mind when assessing this. 1. Recurring versus one-time sales. Is the business making the same amount month after month, or are sales just random spikes based on big one-time deals? Recurring revenue. Think subscriptions, retainers, or ongoing service contracts is generally more reliable. It's predictable, easier to forecast, and gives you a better sense of the business's future. Contrast that with a company that relies heavily on one-time sales, like, say, a custom manufacturing business that lands a few huge contracts every year but has long dry spells in between. That's a riskier bet because your income could disappear if the contracts end or if market demand shifts. 2. Client diversity matters. Another big red flag is having too much revenue funneled through a tiny handful of customers. Imagine a business where 70% of the revenue comes from just 2 clients. If one walks away, that spell could leave a gaping hole in income. On the flip side, a wide customer base means less risk. If you lose a few clients here and there, it won't cripple the business. When you're shopping for businesses, make sure to ask about client concentration. It's a classic question investors ask for a reason. 3. Payment terms and cash flow timing. Revenue might look solid on paper, but when is the money actually hitting the bank? Some businesses have long payment cycles or get stuck with clients who drag their feet on payment. This can create cash flow headaches, even if their reported revenue is high. Look at invoice aging reports and the average days sales outstanding, DSO. If a business has customers paying up in 15 days versus 90 days or more, that changes the financial health picture dramatically. 4. Market trends and seasonality. Seasonal fluctuations are super common in many industries: retail, travel, construction, etc. Make sure you understand how seasonality affects the revenue. For example, a business might pull in 60-70% of its income during the holiday months but crawl for the rest of the year. Also, keep an eye on the broader market trends. Is the industry growing, stagnating, or shrinking? Even a profitable business may struggle to maintain revenue if it's in a declining market. 5. Revenue growth history and sustainability. Just because a business has flat revenue doesn't mean it's bad, but you want to distinguish between a business that's stable and cash flow positive versus one that's declining and bleeding money. Growth is important, but so is knowing if that growth comes from sustainable activities or one-time events. Are they expanding into new customer segments, launching new products, or improving sales channels? Or did they just close a huge deal that might not repeat in the future? These sorts of questions can tell you a lot. 6. Recency and reliability of revenue. When examining financials, make sure the information is up to date. Sometimes sellers try to present the best picture by focusing on the last fiscal year without considering recent slowdowns or client losses. Ask for the most recent monthly or quarterly statements too, so you can get a feel for the day-to-day reality. Why does all this matter? If you're looking at buying a business, understanding revenue quality is a way to protect yourself from surprises. A big, flashy number on a profit and loss statement might make you excited, but if the revenue is flaky, you'll be in for a rude awakening after the sale. Plus, higher quality revenue sources usually come with higher profit margins, better chances for growth, and smoother transitions. It means a business that's easier to manage and more secure against market shocks. Thinking about buying AI-based businesses? If you're interested in industries that are booming right now, AI-focused companies are definitely worth checking out. Companies in AI tend to have interesting revenue models, like subscription services, licensing, or automated solutions that generate recurring income. One place to start looking is Archie Holdings' AI-based businesses for sale. They offer a curated list of AI-centered companies that you can explore based on revenue quality and other important factors. Visit https://buybiz.io/listings to see what's available. Whether you're new to buying businesses or seasoned in the game, checking out their listings might give you something valuable you hadn't considered. Wrapping it up. So next time you hear about someone buying a business and just looking at the top-line revenue, you'll know there's way more to the story. Assessing the quality of those revenue streams can save you from headaches and help find opportunities that really make sense long-term. Remember, it's about looking beyond the numbers, thinking about sustainability, client diversity, payment flows, and market positioning. These all paint the real picture of how healthy a business's income really is. If you want to take a closer look at great businesses, especially in innovative sectors like AI, take a moment and explore the listings at Archie Holdings. It could be the first step towards finding your next smart investment. Explore our listings today.